right? I'm gonna test my volume first. Let me just double check. Testing. Okay, great. So let's start. It's been quite a while, and I think that my cough has almost recovered. So I'm gonna resume the weekly forecast until further notice. Okay. Right. Let me pull up the charts. I'm just going to start off with Nasdaq, okay, as the main focus. Right. So on the daily chart, this is what we have for this month's price action. Right, opening price of this month, and then right now we are completing the so-called third week of this month. All right, okay. So if you're using days quarterly theory, I wouldn't count this week as Q1, alright, because the 1st of January we didn't have any trading day, so it starts off at Tuesday, so it's not a full week. I would start Q1 from here, 8th of January. Right, so from 8th of January, I mean the first week, we have a rally. Second week down here, we have manipulation, and then followed by expansion. So moving forward, what I'm expecting for next week is continuation higher. Okay, we are and we will be in a buy program until further notice. So right here I have this IPTA data range. So we started off from November. Okay, we have this shift in market structure right here. Okay, so using what ICT has taught in his month 5 for core content, I'm using November as the first day. Okay, the first day of November, and I cast forward 20, 40 in 60 days. So casting forward, we have up to 29th of January for prices to run higher, which is another week or so left. Right, so I am assuming we're gonna attack this this fourth standard deviation. Okay, in the next week, and so on. Now because we are trading above all-time highs, I need to use time to gauge where the price is going to go. Alright, so this is my bias for the rest of January, 4th standard deviation. Okay, and how are we going to move forward from that? It remains to be seen. Anyways, right now we have formed a breaker down here. Okay, next week I'm not sure if the price is going to retrace into the breaker or not, but it seems very unlikely. Okay, on the weekly chart, if we are going to see continuation higher and not consolidation, okay, we are most probably going to get something, a retracement into 2.5 minimum before higher prices. Okay, so what can we find within this range here from 2.5 to discount? Okay, daily time frame obviously has nothing that we can derive from other than this breaker here, but personally I don't think it's going to retrace into this breaker, so I'm jumping into the 4 hours. So the 4 hours, we have this order block and this fair value gap. So the chances of it coming into this fair value gap here, it's more likely to happen for next week. Okay, and based on the calendar itself, next week we only have news from Wednesday onwards to Friday. There is no news on Monday, and there is no news on Tuesday as well. So I'll have to wait for the Tuesday's opening price to gauge at that time, at that point of time, where are we and how are we going to move forward with regards to getting to the 4th standard deviation right here. Okay, now let's see the daily range. Okay, same thing here. I'm gonna apply that grading on the daily candle itself, and I want to see if we can take out Friday's high next week. Okay, so from there we can have 4 hours. We have this order block, this fair value gap here on the 1 hour, this fair value gap. Right, 30 minutes we have a swing low. Okay, this is what I'm looking for. I'm looking for a swing low, because even if it wants to go higher, I believe it's going to seek a certain sell stops before going higher. Okay, and we have the nearest sell stops right here, nearest to 2.5, 0.25, sorry, 0.25. We have a sell stop on the 30 minutes time frame, so this is enough. So I want to see if price wants to leave Friday's high and then drop into this area here and then move higher. Okay, if it takes out Friday's high first, then obviously I'll be looking for a retracement trade down into 2.5. Alright, on the 15 minutes, let's take a look. Yes, we have this sell stops as well. Right, the last time it took out a sell stop, well, it was right here before this run higher. So we can actually use this as a measurement for reversals. So let's take a look. Right, so we're reaching for standard deviation right here, and if we were to use the breaker, if we were to take the sample with the breaker and the low, and the low and the breaker, we are right around 2 to 2.5. So let's say if it closes above 2.5 right here, we're gonna reach into this area here. But right now I'm just gonna be slightly more conservative. I'm gonna use this sample size instead. Okay, so the nearest targets will be right here above Friday's high, and then we will probably see some form of retracements. Okay, so with all this out of the way, because we are trading on above all-time highs, we have to use time. I'll be using time to gauge how far it's gonna go and for how long it's gonna continue. So right now my main focus is 29 January, and until then it's going to be a buy program to run higher. Okay, that's just my opinion here, and the framework going to next week. Alright, so with that, let's move on to the dollar index. So for the dollar index, right now we are on the monthly time frame. Okay, this is a yearly fair value gap right here, right? And at the same time we have a inversion fair value gap right here as well, and then we have a monthly volume imbalance. So my thoughts on dollar is that it's going to offer OTE entry into this yearly fair value gap down here, and if we were to do that, we're gonna have a really easy time for indices to rally, because dollar coming down, it's more likely the indices is going to come down. But it's not an ironclad correlation, so they can both go down together. It doesn't mean that it has to go up, but it just means that nothing will be capping indices to go higher if dollar is trading lower. Okay, so what I'm expecting is for the dollar to trade up into this monthly inversion fair value gap above the swing highs. So it's going to take out the highs here, and it's going to reverse down lower, right? And that will be my last defense for bearish idea on the dollar. Okay, so let me just mark out the OT range for you. So OT range is right down here. We have this proportion order block. Okay, we have this proportion order block, and then it's right within the OT range, and it's above the swing highs here. So think of it as a basis of high resistance liquidity runs. This is going to come up into this swing high, take out the stops, and then run down here. This is still my bias for the dollar until proven otherwise. Okay, so what invalidates this setup here is that if dollar shows no reaction of this area here, okay, which means after taking out the swing high here, it proceeds to close above this CB or the mean threshold, that would be the last line of defense of this order block here, then we are most probably going to go higher. Okay, that's for my take on dollar. Initially I was looking for this price here, this fair value gap here, to send the price lower, but right now that's becoming very unlikely due to the fact that it has closed above it. Okay, for this week itself. So as you can see, dollar is rallying, indices is rallying as well, so they are not like a 100% iron fist correlation. They can move up together and they can move down together as well. So it doesn't work like forex, whereby dollar up, you have euro USD down. Okay, it doesn't work like that if you're using it for indices. Okay, so this is dollar, and let's take a look at ES right here to see if there's anything that I can utilize. Right, no, nothing much here. Right, so on the macro time frame, if you take a look at NQ and then you use the projections, oops, this is not a projection tool. Okay, so if you use the projection here from the swing low to the swing high that made the first retracements, oops, basically it's just the first leg of distribution. We're gonna have standard deviation 4 right up here, which I think it's feasible if we can close above 2.5 this month itself. Okay, so we might have a mini bull run even after 29 of January, right? Because we are looking for a high on 29 of January. So maybe during that time, price is going to retrace down into this level here to 2.5. We have the wick here. As right now we have the wick here, we have this fair value gap down here, we have this 3 bullish order blocks. Okay, and then we have a breaker. So lots of confluence for the price to go higher if price is able to go, if it's able to close above 2.5 standard deviation, right? So on higher time frames, longer time frame, I'm still bullish on NQ, but obviously you can trade both directions on the lower time frames. Okay, so I repeat again, I'm gonna see and I'm expecting a top, a temporary intermediate top on 29th of January due to the delta range 60 days. That's usually the maximum, whereby from then on we are going to have a shift in sentiment. So a shift in sentiment could last 20, 40, 60 days. So maybe the retracement would last about 20 days and then we can resume higher. So that's what I'm expecting, because heading into the month of February and into the month of March, seasonally wise, indices is bullish. So especially from the mid of February to the mid of March, indices tends to rally. So we might have a short-term high formed on 29, and then we trade lower into a discount, and then from there we trade higher. Okay, so from here, as you can see, last year basically February, okay, March, and then higher. So we could get something like this for as a retracement, right? That lasts around like about 40 days, 2 months if I'm not wrong, yeah, or 1.5 months, right? So maybe about 20 to 40 days here before the sentiment continues higher. So right now what we are seeing is something like this, okay, and then we're gonna have a slight retracement, then we're gonna go higher. So that is what I'm thinking for this year as well, according to the IPTA data range. Okay, So yeah, that's it for indices and DXY. I'm gonna move on to HSI. Okay, so HSI is pretty interesting. If you have watched all my, okay, maybe not on this template here, let me switch templates. HSI. Now if you have watched my previous forecast, you would have seen that I called the move from this fair value gap down into this short-term low here, and then from there I'm expecting a run on the lows here and then into this level here. So right now we are seeing that play out pretty nicely, right? Right at the last few weeks into 2024. Okay, so I'm still bearish on HSI, and that also means I'm bearish on all China stocks. Okay, so let's take a look at CSI. So for CSI, it's the same thing here. I'm looking for this fair value gap to be filled. Okay, and I want to see if it wants to run this lows here, right? Because we are closing below the mean threshold, or below the 50% of this fair value gap that was used to make a higher high. Okay, this is a we're right now in a bearish order flow, and I want to see that respected by having no candles on the monthly chart closing above this fair value gap. And as long as it does not close above, I am bearish on CSI until this levels here, and I want to see if it wants to melt through the lows down here. Okay, so ultimately I'm still bearish on China markets. Okay, now let's move on to some of the, let's see, let's move on to Bitcoin. Right, so initially I thought that we're gonna have a retracement before attacking this high here, but since it has attacked this high without any retracements, I believe we are going to reverse down into minimum 34,102. Okay, and why is that so? Because that was the last inversion fair value gap down here as well, and at the same time we have we have these two bullish candle supporting this fair value gap, and this fair value gap was the one that broke market structure above the swing high. So this fair value gap has a lot of things in confluence with it, which is why I chose this level. Okay, and because I am on the longer time frame bearish on Bitcoin, I want to see Bitcoin taking out this fair value gap here, melting through this fair value gap. Okay, this fair value gap, okay, melting through, and then take out all the lows down here, especially this low. Okay, low at 24k. Why is that so? Because if you look at the 3-month chart, we have a fair value gap down here. Okay, so if Bitcoin is to be bullish, this this down close candle should not be violated. Alright, so as long as this candle here can support the price, we can have another bull run. But I think personally it's going to run through this down close candle, and we're gonna run the lows. Okay, we have lots of sell side liquidity that has yet been tagged. Okay, all right, so that's for Bitcoin. Lastly, let's take a look at gold. Okay, on the weekly charts. Now, I still do think that this is the next draw on liquidity because we have managed to close above 2.5. So, what I'm thinking is that if it wants to rally, this would be the price point of reversals and targets. And I'm personally wise, I just do not like this equal lows down here. This looks like it's building up liquidity for later on, and at the same time we are in consolidation. Price is not going anywhere so far, therefore we might get a run into this if it's going to provide a bearish order flow. Okay, so that's for gold. Still in a huge higher time frame consolidation. Nothing has moved yet, and there's no closing prices above this old high just yet. Okay, as you can see, they are all wicks. Let's see. Let's move on to. I want to take a look at the treasuries. The interest rates. Sorry, not the bonds. The interest rates. Okay, so as I was anticipating, naturally I would like to see a run into this fair value gap before higher prices, but in a case whereby we run into the highs here before this low, I mean before taking out this fair value gap here, that will be problematic because that would confuse or mess up the whole symmetry between the dollar and indices, right? Because naturally if dollar is to go higher, indices is going to go lower, naturally speaking. But in this case itself, because indices is at all-time highs, and if we get the dollar attacking the highs first, we're gonna have a reversal, and I'm not sure if indices is going to follow through with its own crash, or it's going to remain strong and we're gonna have a really strong bull run. So that one I'm not too sure. Okay, but yeah, so far this is my bias. Okay, it's pretty tricky right now because the dollar, it's not moving smoothly, right? It's not a low resistance liquidity run, therefore it's kind of tricky. Right, so with this, let me just take a look at the calendar and the scheduled events next week. Where is let me just Windows capture add source. Right, so I'm just gonna take a look at the calendar here. Yep, so as I was saying, there is no news on Monday and Tuesday. So my focus will be on, for me personally, I like Wednesday. Okay, Monday and Tuesday should set the stage, okay, for the rest of the let's see. Alright, I think that's it. I can't really pinpoint or determine anything from here, so I just have to wait for Tuesday's opening. And with this, I'm gonna end this session. Right, I hope you enjoyed it. It's been quite a while. The cough has been like persistent. It's really persistent. So let's see how it goes from here. And yep, hope you have a great weekend. Thanks for watching, and see you in the next one.